North Korean leader Kim Jong-il dies, worries spread about a stable succession plan. The U.S. dollar index climbs as worries mount that France might lose its AAA credit rating, and European finance ministers meet today to debate funneling 200 billion euros through the IMF. I'm Alex Steele, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Alex Steele with The Street, and together we bring you Morning Call Express. Scott, let's get right to it here. What does Kim Jong-il's death actually mean for the markets and you as a trader?
Just means more uncertainty because no one knows about who his predecessor is. Actually, they know who he is, but they don't know how crazy he is. They don't know if in the
or
next...
how much power he will retain.
Exactly. And who knows if in the next 3, 6, 9, 12 months he tries to flex his powers and show that he can't be messed with, and all of a sudden one day we're all long, technicals look great, and then they do something that shouldn't be done. So it's just something else to throw out there.
So we have that headline. We have the European finance ministers meeting to discuss distributing that 200 billion euros through the IMF. We also have Congress not delivering any final solution on extending payroll taxes into the next year. So as a trader coming in today with futures higher, what do you do?
I've been trying to figure out many reasons to get excited because this tape is very lethargic right now. The indices still are holding up. We're still above those retracement levels, but it feels like stocks are breaking down underneath the surface. I'm seeing technical damage add up in a lot of the key stocks, the momentum names, the defensive names. So right now, the indices look okay, but usually I come in, I'm excited about certain setups, and I'm really not that excited about what could transpire in the next week or two going into the end of the year.
So let's go to the chart, and I wonder, would you be looking to short on this sort of up open that we're having?
I'm going to take it as it comes because they might want to keep the fix in for now. So I know a lot of people tried to short on Friday with quadruple witching, and it wasn't that easy. So we're still intact. I want to show you some levels here. If you look at the chart of the spiders, you will see that actually I'll do the SPX, that the rally is still intact, is lethargic and as monotonous as it's been. You look at these retracement rules that I write. This was that first move up to that 1292 high from the reversal. This was fast and furious, and we came all the way down to test that 61.8% retracement. And then you had another nice move. We all know about this 1260 level that held the rally, this downtrend that stayed intact. But if you use these retracement rules again and you go up to where the resistance came into place, you will see that we're not even back to this 61.8, which also comes into this uptrend. So even though this has been just tedious, downward type of movement, we're still above the level that held here before another move takes place. You don't want to just short haphazardly, but buying has not been working so much either.
And as you said, Scott, a lot of defensive names, and including gold, I have to say, has not been holding key technical levels. Gold broke through its 200-day moving average last week, still trying to recover, can't get over that $1,600 level. I do want to point out, though, that it seems like a lot of the action was on the futures market. If you look at, say, ETP holdings, they're still really holding in there. The GLD shed only about 15 tons in the last week, so there is still significant, substantial lack of selling, I guess is the right way of saying it, but technical damage done.
Yes, and if you're long the GLD and not the physical, you were in pain.
Yeah.
There were some technical patterns that I've seen add up in the last few months that I want to show you. So if you take a quick look here at the GLD, you'll see there were some things to watch. You guys remember this outside day when it tried to break above the highs back in September, closed near the lows. This was sell signal 1. Then this pennant that came into place, sell signal number 2. And then once we broke this macro pennant, we came down fast and furious. But we did hold this breakout level way back from July. And you brought up a very interesting point last week. You said sometimes when gold breaks its 200-day, it could be very positive for it. So I do think that we have something to look for, that if GLDs or gold can't take back that 200-day in the next, I would say, 5 sessions, we'll know exactly how weak gold is, and then you have to start looking at levels well underneath this.
And that 200-day now at 1610. Okay, wrapping it up very quickly, want to talk about the ideal stocks, right? The Apples, the IBMs, the McDonald's, the ones that investors tend to go to, the institutional investors want to buy. They're not holding up really well. What does that say about quality stocks that aren't holding up?
It goes with that whole thesis that these stocks are breaking down underneath the surface. So even though we have a lethargic tape in the S&P, look at something like IBM. IBM came off quick. Is up here for momentum, trying to hold this 190. 190 doesn't hold, pow. You get a big move lower. So you have to understand if you're in this for the long term or you're in this for a breakout. You know what? It broke down, and you're starting to see some other quality stocks that might be in jeopardy, even like this McDonald's. Look at this perch. If you're not committed to McDonald's long term, you better have a stop here at this 97 or so.
All right, we're going to talk about other stocks and sectors you need to watch out for, those buy levels and exit levels you need to pay attention to on the entire morning call on the street, so stay tuned.